How much should the gross expense be in terms of percentage? Can we decide on based on that how much expenses, that whether we can include any other staff member or not? How do we include our expenses on equipments or courses in our day-to-day expenses of clinic? Hi, I'm Dr. Bhavdeep Ahuja. I'm a dentist with 23 plus years of experience, and along with dentistry, I'm training and coaching colleagues on the topics of practice management, finance, medical legal ethics, documentation, and consent. So in a recent discussion that happened in WhatsApp community of mine, which I'm running since 5.5 years, about tracking of expenses, there were these three beautiful questions put up by a participant. So I thought that I have to make this video to, you can say, dissolve off all the misconceptions which are associated with this topic. So let us take those topics one by one and answer all the three queries that I mentioned right at the start. And if you also want to be a part of my community, please do message me. I'll add you in my WhatsApp community. And of course, on Facebook as well. So the first question was, how much should the gross expense be in terms of percentage? Now, this question had a further part because we dealt with fixed and variable expenses. So how much fixed, how much variable? The point is, you whether want to believe it or not, the fixed expenses are to be paid. Remember the COVID times when we did not go to clinic initially, and what did that lead to? We still had expenses, and those expenses were the fixed expenses. Now, we didn't have any material purchases in those days. Yes, apart from the new purchases that came up, the sanitization material, the PPE kits, the shoe covers, and a few gadgets that were specified were the stalwarts of the industry at back then, led to an impulsive buying. Again, getting those, keeping those aside for a minute, but the rent, the salaries, the other expenses, the government bills, all had to be paid. So the fixed expenses are still there. If we have to put a number, I would feel very comfortable if my total gross expenses are never beyond 50%. For example, if I am clocking 1 lakh rupees per month gross collection, I will never want the net home to reduce below 50,000 rupees, means 50% of that. Now, how to decide about the fixed and the variable? Now, this is one thing you need to decide, and this has a direct correlation with your treatment charges or the pricing you charge for your treatment. Now, pricing is not dependent upon your neighbor. It depends upon your procedure. It depends upon your cost. It has so many other variables attached to it. Now, if you're doing just a little bit, you can say on the higher side of your expenses, and still your expenses, your net home is less than 50%, it's actually bad. It is a first indicator that you are not priced adequately. At this point of time, I will suggest everyone to follow my costing videos on YouTube, which are there. Search profitability in dentistry, and you will get a link to my 5 set of profitability videos, which will tell you how to set the right prices in clinic. That will tell you the minimum that you can charge, that you should charge for the procedure. Now, having said that, just remember the fixed are the expenses which have to be paid, whether you are, you can say, indisposed, sick, having a fracture bone, sitting at home, the fixed expenses still have to be paid. The variable, they do vary. In North India, we have another additional variable expense, which is known as air conditioner. Of course, majorly the variable expenses would be your materials and your lab bills. The more production you have, the more production means the more consumption of the both you have, the more patients you have pertaining to that, your lab bill will increase, your material consumption will increase. And of course, in summer season in Northern India, the AC consumption or the electricity expenses also increase. Now, once these things increase, it will automatically mean that you are having an increase in revenue also, because the variable are directly related to your revenue. If you don't have a consumption, your variable are going to stay lower, on the lower end, or on the, you can say, on the minimal side. That is only the fixed expenses there you have to pay. But having said that, you should be charging reasonable amount. So whatever it is, maybe more OPD, less OPD, medium level OPD, your net carry home should not be less than 50% in any case. And when I talk of that, I include all expenses, fixed, variable, and depreciation. Now, many of you will ask, what is depreciation? Depreciation is, simply speaking, written down value, or in Hindi, as we say, ghisne ki value. Any equipment that you buy, you don't get a costing benefit of that. Means you don't reduce it from your expenses directly. You reduce only a portion of its expenses, which is known as depreciation. On an average, any rental equipment would have a depreciation of 15%, 15, unless specified otherwise. Now that answers the first question. Let me go back to the second question. How do we decide if we can afford another staff or consultant into the practice? How to know the upper limit of payments we can give to our staff? Now, the thing is, again, the question has two answers to it. The first aspect is practice management related and not necessarily finance, where this query was going on in our finance group. The first thing is, learn to delegate if you want to make your life easy. You can't do every activity in your clinic consistently, and that too on the, you can say, always on the go type. So you can't do that. So you have to delegate a few things. Now, when you're delegating a few things, that means you are able to do another task in the same time when your consultant or your another staff member is doing that, which effectively means you both are working at the same time sometimes, which effectively means more revenue for the clinic as well. So that more revenue automatically decides that you have to pay. Now, having said that, that expense also falls in the fixed expenses. If the associate that you keep is on a salary, if it is on a share basis, then that falls in the variable expenses. Automatically, it will decide that whether you are going to hire that or fire that, or whatever way you are going to decide it. But make your life easy wherever you can, wherever you need to, please delegate it. And there is no upper limit for it. Don't hire cheap people. Don't hire, you can say, cheapness, or don't resort to cheapness on your way to greatness in your practice. Once you do that, you need to remember, if you hire skilled people, skill and talent comes at a price. And if you're ready to pay that price, please go ahead and hire them, because ultimately the new staff member that is going to come in, the consultant that is going to come in, are going to make your life very easy. So I hope this answers the second question as well. So going to the third question, how to include expenses on equipment or courses? Should it be included in the month of purchase or course done as an yearly expense? Should depreciation be considered while calculating? Same queries for material purchased, since we have a long expiry. So do we keep a budget for expenses in such cases? What to be done? What is to be done in such cases? Now, the first thing you need to remember is that for any equipment, as I told you in the first part of this question, the first part of this video, the equipment will have a written down value, or a portion of it will be used as an expense and not the whole equipment. For example, you bought an equipment or you bought an autoclave, for example, for 1 lakh rupees. And if you had bought before 3rd of October, which is ideally, you can say 185th day of the year. If there are less than 185 days remaining, means you buy in the first half of the financial year, then you are allowed full depreciation. Now, full depreciation here means if you bought it for 1 lakh and it is allowed a depreciation of 15%, you are allowed to reduce 15,000 rupees as an expense from your depreciation part of that autoclave, which means whatever materials you have are part of that, whatever bills you pay are a part of that, and in additional depreciation will add 15,000 rupees of the autoclave in that. Now, if you bought it after 3rd of October, 4th of October in case of leap year, when you have 29 days in Feb, but normally speaking, if you buy it before, you can say after 3rd October, then you get half of depreciation, which means 7.5%, which means 7,500 would be the expense that would be reduced from 1 lakh rupees. And the next year onwards, you can get the 15% from the remainder amount. For example, if you bought it before October, you can reduce 15% from 85,000. But if you bought it after October, because you got 7,500 in the first year, you can reduce that amount from 92,500. Just to explain you very simply, this is the logic, or this is the, you can say, basis we calculate our equipment expenses. Now, materials or courses, these are both falling under the consumables. A course is an upgradation of knowledge which goes in the direct expenses, and material is also a, I can say, material is also a direct consumable, so it also goes in the direct expenses and does not get into that mode of depreciation. So it is also minused in full or deducted in full. So now is it going to be yearly or monthly? For materials, even if you buy on 31st March, you get the full deduction. It is not an equipment which is carried forward, so it is a material. And of course, the payment for that should be made by then if you're following the cash basis of accounting. Accounting has two bases, cash basis and a mercantile basis. 90% of CAs follow the cash system of accounting. In that, the payment has to be made by 31st March to be made for the eligible or the course to be done in this year itself. So it is not a monthly thing. We always calculate from April to March in the financial year. So expiry or not expiry, you are not carrying forward the stock, which means even if you have half the bottle of your glass ionomer remaining, you don't count it in next year. You already accounted it for in the full cost in the previous year when you bought it. For example, if you bought the bottle for 3,000 rupees, you deduct 3,000 directly from this year. Maybe, just presume that bottle might be running for 2 years, 3 years. It does not mean that you have to put, if it runs for 3 years, which is hardly impossible anyways. So, but you don't have to put 1,000 each year, or you can say 200 each month. No, it is done annually as and when the purchase is made, even if the bottle runs for 3 years. When you buy the next bottle, you can say add that expense in that. Now, this was just to give you an example. So you add that in the same. So expiry is not a criteria. Depreciation is not applicable on consumables. It is applicable only on equipment. So budget for expenses. Yes, you need to know how to decide, what to decide, how to order, how to place your reorder levels, how to, you can say, decide your consumption levels. For that, you have to keep a record of that. You have to keep in mind the lead time as well. Of course, tier 3, tier 4 have to do more of that. Lead time means the total order time taken from order to delivery. So that is, you can say, the answer to this question. So I hope you get your answer, Dr. ABC. Of course, I'm not naming the person who has asked it. How much should the gross expense be in terms of percentage? How do we decide if we can afford another staff member into practice, or what is the upper limit of payment you can give? I told you, cheap people, talent comes at a price, so you need to pay the price as well. And how to include expenses on equipments or courses, I think I've detailed it long enough. So if you find value in this video, please do like this video and share with your friends and colleagues. And please don't forget to subscribe to my channel. And I see you in another video of mine very, very shortly. Till then, bye-bye. Take care. Have a great day.